For most of 1987, Wall Street's bull market continues to surge upwards. The remarkable 5-year-long spree has catapulted the Dow Jones Industrial Average from 777 points in August 1982 to a record 2,722 points in August 1987. Then, on October 19th, the bubble bursts.
Just going down and down and down, never stop.
Well, I'd call it the nearest thing to a meltdown I ever wanted to see. So that, and I think that it's for a variety of reasons, though. And what I'm just saying, I don't think there's any one thing. It's a culmination of things that have been building up for the last 9 months that have led to this, and I would certainly call it the worst market I've ever seen in my lifetime or hope to see again.
I think there's a state of shock and obviously an element of fear that crept in. And so it's very hard to be sure how easily fear is handled.
The plunge is the worst in Wall Street history, with over $500 billion in equity lost in just one day.
I know no one that has essentially anticipated something of this nature. It is awesome, it's overwhelming, and it's certainly a moment in history.
Some brokers on Wall Street said they saw it coming. A correction, they called it. And after 8 months of record highs, analysts saw fear and emotion sweeping the stock exchanges. Computers couldn't keep up with more than 600 million shares that changed hands. A new record that beat the record for trading volume of 338 million shares established just last Friday. European stock markets responded to last week's dramatic falls as they opened this week. The British Stock Exchange saw 40 billion pounds, or 65 billion US dollars wiped off share values. And most of the shares traded in Frankfurt lost 5 to 10% or more as trading commenced. And stock prices overseas are expected to retreat even further in response to the Wall Street plunge today. Shortly after the market closed at 4 p.m., John Phelan, chairman of the New York Stock Exchange, held a press conference where he told reporters he considered halting trading, but the consensus was to let the market settle on its own. Many brokers come to Harry's at the American Stock Exchange, where there was talk of a further fall in prices.
The correction has been rumored for quite some time, and obviously it's happened today.
Has the market bottomed out?
No, absolutely not.
Do you think later this week we're going to see some more drops?
I think tomorrow you may see somewhat of another drop. I think the next couple of days, perhaps.
Brokers blamed a concern over higher interest rates, the decline of the U.S. dollar, and our country's retaliation against Iran for today's record loss. And here on Long Island, many said they weren't surprised.
I expected this to happen, so I'm not surprised because I did expect it to happen. I mean, it was inevitable, wasn't it?
I think it's going to go down even further.
It was a strict overreaction to what happens on Friday. People panicked and they just needed to get out.
Blue chip stocks led the rally for the Dow, but across the market there were more losers than winners. And the volume of shares traded was well over 608 million shares, breaking records for 3 days in a row.
There's going to be a lot of jitters in the market. Everybody's going to obviously be nervous every time something happens. But it looked pretty strong today, considering what happened yesterday.
Chemical Bank and Marine Midland both dropped their prime rates by a half point, which brokers say helped the market rally. London's main stock index dropped 10% in the first half hour of trading. Prices also dropped in Japan, Australia, and other Far Eastern countries. At the New York Stock Exchange, Chairman John Phelan held another press conference where he sought to allay fears.
There certainly was a rumor, a significant rumor about several firms, which we were assured by the firm was not true at all. We have no reason to believe at this point in time that any firm has a problem.
Phelan also said that if there had been another 100-point drop, quote, we would have had to consider if the whole thing needed a rest. If the whole thing needed a rest. We would have had to consider if the whole thing needed a rest.
Is charting its best performance yet, revenues up 31% in the first 6 months. Hit hardest by the crash, small companies without enough financial backing, highly leveraged companies and financial firms. Wall Street lost some 16,000 jobs, but even a company like Ulston cannot ignore the crash.
We aren't trading as heavily as we were prior to last year.
Light volume has been a feature of the post-crash market. Polls show the small investor has just about disappeared and is downright suspicious.
They're more conservative, they're more income-oriented, and they're more risk-averse.
Of the market crash, Long Island has been suffering from the high cost of doing business, scarce labor supplies, very high taxes, restrictions placed on the home builders in terms of zoning, waste disposal, environmental concerns, and the like.
What the crash may have done is add to an already slowing economy, but it also may have added a needed element in this economy: caution. Taryn Gottlieb, News 12, Long Island.
We would have had to consider if the whole thing needed a rest. We would have had to consider if the whole thing needed a rest. If the whole thing needed a rest. If the whole thing needed a rest.